Hello everyone, and welcome to another video. In this video I'm going to backtest and show you one example of the AM reversal model. I'm going to dive into the requirements for the model, additional methods of Confluence for the model, and a visual that can help you understand what constitutes a valid trade. So as you can see here, it is 9:15, headed to 9:30, market open on the 15-minute time frame. Now what do we have here? What can we identify here? Well, to begin, as you can see, we had quite the range over here. We have equal highs right above. Here I'm going to put the equal highs right here, and you can see below we have sell side liquidity. This is low resistance liquidity. Here it is making higher lows, and I will go into why this is important for this trade. So right now, at this very moment, there is no trade to take. You see that it took this high, and upon market open, it begins to dig into this bullish imbalance. It respects it. Although it wicked below it, it respected the imbalance and comes right into these equal highs, nearing 10 o'clock. Now, this is where you will look for the reversal setup. You see it wicks above and begins to reject lower. Now, why is this important? An additional level of Confluence that you can add is the premium and discount. What does that mean? You can use your fib retracement, mark the low to the high of the dealing range. This is why it's important. Some of you may not know what the dealing range is. The dealing range is a range from low to high where the low swept liquidity and the high swept liquidity. Here, the low right here swept this liquidity. This low didn't sweep liquidity, this low didn't sweep liquidity, this low didn't sweep liquidity, this low didn't, and this low did not either. So we're in a low resistance liquidity mode. This means that this is the low of the dealing range. You form from the low to the high. Anything above the 0.5 level is considered a premium, which is ideal for shorts. Anything below the 0.5 level to here is considered a discount, which is ideal for shorts once price sweeps sell side liquidity. So we get price go to it and through the equal highs right here. This is your cue to go to the lower time frame and look for a potential entry. So we drop to the 1 minute. I'm going to, just give me a sec, I'm going to align this. It was at 78.25 if I'm correct. Yeah, 78.25. I'm going to move this here. 78.25, perfect. All right. Here is the sell side. This is the equal highs, which is buy side liquidity. And what do we see here now? Price digs in further and further before reversing. Now, what can we identify here in this leg? Well, we get a breaker. Before I plot it, I want to see if you guys can find it. Where is the breaker here? It's basically, I'll just show you what a breaker is with my path before I mark it up for you. The breaker is this right here. It makes a high, a low, a higher high, breaks through that initial low, forming a lower low and retesting that initial low. Now, where is the breaker here? The breaker is right over here. Apologies. Right here. Now, some of you may be a bit confused. You may have thought this was the breaker. No. That is a up closing candle. For bearish breaker blocks, it is the down close candle of the low before it makes a higher high. The other way around, a bullish breaker is only for an up close candle, which means it is the initial high before we make a lower low. So in this case, we get high, low, higher high, break through this low before retesting it. And here is the breaker. That is the down close candle. Once we come below, we retest it. Here was our entry. Right here. You enter upon the retest, stop above the high, and target all the way to the opposing sell side liquidity. I'm going to move it over to make it a bit more neat. So now you have your trade set up right here. 3.48 risk to reward. I'm not big on risk to reward anyways. I trade what's on the chart, but you can see in alignment with the fib, we are in a premium. This is added confluence. This adds, it means it's an optimal area to go short. It's more probable. You put your stop above the high, the risk is suitable, and you target the opposing sell side liquidity. Partials. Where do you take partials? I'm going to plot out two places along the way that you can take partials, beginning with this one here. This is internal liquidity right here. You can take partials right here and the 15-minute time frame right here. This is the high of the 15-minute bullish fair value gap. So 15-minute fair value gap high. Here are two places alongside the midpoint. You can also take partials. So since one is very close to the other, you can decide which one you're more comfortable. Do you want to ride it out to the midpoint, or do you want to take partials at the 15-minute fair value gap high? Both are suitable take profit levels. You can see this bullish imbalance. That is one place to take profit. I'm going to take this out because I would likely take profit at the internal liquidity. And for those that want to and are comfortable taking it at the midpoint of the dealing range, you can do so as well. So now that we got our entry, let's see how price reacts. Before I play, I want you to realize what time it is. We are headed into 10 a.m. The model is optimal between 9 and 11 a.m. Between 9:50 and 10:10, in my opinion, I'll say 9:45 to 10:15. That window is where when the setup comes, it is truly optimal. That's my favorite time area, that half an hour time window. When the setup forms in that time window, you see typically the cleanest delivery. Now, if it's outside of that time window, you'll still see some clean deliveries, of course, just based on my past trades. That is when I see the cleanest delivery. So we enter at 9:58 a.m. and I'm going to slow down the speed. And what do we have here now? Along the way, it's forming. This was, for the moment, a breakaway gap. unless it gets retested in this leg, and we want to see if it gets respected. As you can see, as of right now, just to show you guys, 38.5 is the low of that fair value gap, 38 is the high of that candle. It did not get tested. That is an incredibly bearish sign. That is what you want to see. You like to see breakaway gaps. It goes to the 0.5 level. If you wanted to take partials there, by all means, that's a good place to take partials. Let's look a bit more. You could take partials at this internal liquidity as well. At this point, you should have runners left for the sell side liquidity. Now, before I continue, typically, I tell traders not to intervene with their trade, 100%. But is it ever suitable to collapse a trade? The answer is yes, it is. And there's only one condition for you guys that it is suitable to collapse the trade. And that is if three PD arrays in your favor get disrespected. That would mean 3 fair value gaps, a fair value gap, a breaker, an order block, 2 fair value gaps and a breaker, whatever it is, 3 PD arrays in your favor. If all 3 get disrespected, you may collapse the trade. It is showing a shift in narrative. That's a sign that you should be looking to no longer want to be in that trade. Because if price was truly bearish, let's say, it would not disrespect 3 PD arrays. So here, 1 fair value gap gets disrespected. Continues lower. And now you see it's beginning to chop. That doesn't mean you collapse the trade. We still stay with it. Now, see this? These are the strong moves you want to see. Like this. Strong moves down. Range a bit. Strong move down. Continues to chop around. And there we have it. That is where you are out full. For almost 83 points, you can see off that bearish breaker, significant leg lower to the midpoint. Begins to consolidate for a little bit. Another leg lower to the internal liquidity. Begins to form a slight rejection, consolidate a bit, and then the last leg to that sell side liquidity level. This is one of the AM reversal entries, the breaker. The trade lasted for around just over an hour. And so, yeah, this is what constitutes a valid AM reversal entry. Now, what I do want to see is this is just purely my curiosity. I want to see how price reacts to that sell side. You can see now it's beginning another leg. Now it's starting to head higher. I don't know what happens after, but you can see once we are out of that trade at the sell side liquidity level, then it begins the leg lower. Now, it can happen where after the internal liquidity, it'll pump. But typically, when you exit that sell side liquidity level, you will begin to see a significant reversal. So with that being said, I hope this was a good breakdown, provided some insight on this model with another added method of Confluence using the fib of the dealing range. Don't forget that, of the dealing range. Not just any range, the dealing range. Because with just any type of range, it can start to get confusing and inaccurate. Here you can see it crosses back below the equal highs it swept, entry in a premium, and dumped to the 0.5 level, consolidate, internal liquidity, consolidate, sell side liquidity, reversal leg up, respecting bullish PD arrays now. So with that being said, I hope this brought some value to you guys, and I I will see you in the next video. Take care, everyone.